Picture this. A company loses almost $5 billion in a single year, and Wall Street responds by handing it a valuation of nearly $2 trillion. That's not a typo. That's not a meme stock gone wild. That's SpaceX. And what just happened with its IPO has analysts, hedge fund managers, and finance professors all staring at their screens, wondering if the rule book they've used for the last 100 years just stopped working. Hey everyone, welcome back to Pulse AI. I'm Nova. And if you've been anywhere near financial news lately, you've probably seen the headlines. SpaceX went public. It was the biggest IPO in history, bigger than Saudi Aramco, bigger than anything Wall Street has ever priced before. But here's the part that's really blowing people's minds. It's not just the size of the deal. It's that nobody, and I mean nobody, can agree on what this company is actually worth. And that disagreement, that's the story today. So let's start with the numbers, because they're wild. SpaceX priced its shares around $72, but within days of trading, the stock rocketed past $160. That puts the market cap at over $2 trillion. $2 trillion. For context, that's more than the combined value of household names like Coca-Cola, McDonald's, Disney, and Nike put together, and honestly, that's not even close. It's bigger than basically every company on the planet except a tiny handful at the very top. Now here's where things get strange. In 2025, the year right before this IPO, SpaceX brought in close to $19 billion in revenue. Sounds huge, right? It is. But in that same year, the company lost almost $5 billion. Net loss. Nearly $5 billion. So you've got a company that is bleeding cash, and Wall Street just handed it a valuation that's somewhere around 90 times its annual sales. To put that in perspective, NVIDIA, the company sitting at the absolute center of the AI boom, the one everyone loves to call overvalued, trades at roughly a third of that multiple based on its sales. So if NVIDIA is considered expensive, what do you even call SpaceX? This is exactly why traditional financial models are struggling here. Think about how Wall Street normally values a company. They look at earnings, they look at cash flow, they build discounted cash flow models, they compare price to earnings ratios against similar companies in the same industry. That whole toolkit assumes the company you're valuing actually fits into a box. Airlines get valued like airlines. Tech companies get valued like tech companies. Defense contractors get valued like defense contractors. SpaceX doesn't fit in any box. It's a rocket company, sure, but it's also the world's largest satellite internet provider through Starlink, which has now crossed 10 million subscribers, more than double what it had just a year earlier. It's also, according to its own filings, the primary launch provider for the United States government, responsible for the vast majority of the country's major national security space missions last year, and every single crew and cargo mission to the International Space Station. A meaningful chunk of its entire revenue comes directly from the federal government. So is it a telecom company, a defense contractor, a space transportation company, an AI infrastructure play, since part of the pitch now involves data centers in orbit? Honestly, the answer is all of those things stitched together, and there's no historical comparison that captures that combination. Analysts have actually started putting SpaceX in a brand new bucket some are calling strategic tech, the same category people use to try to explain sky-high valuations for companies like Palantir. These are businesses so deeply woven into national infrastructure and government operations that normal supply and demand logic doesn't fully apply to them anymore. But here's the part I think is the real heart of this story, and it's not really about Starlink or government contracts, it's about reusability. For decades, the entire economics of the rocket industry were built on one brutal assumption: every rocket is single-use. You build a multi-million-dollar machine, you launch it once, and then it's gone, sitting at the bottom of the ocean. That assumption is baked into every cost model, every pricing structure, every competitor's business plan in the industry. SpaceX blew that assumption up literally and figuratively. By landing and reusing Falcon 9 boosters over and over again, they collapsed the cost per launch to a fraction of what traditional aerospace companies could ever match. And now with Starship, they're trying to do the same thing at a scale nobody has attempted before. When your core input cost, the rocket itself, becomes something you can fly dozens of times instead of throwing away after every single flight, every financial model built around the old cost structure becomes instantly outdated. Competitors aren't just behind on technology anymore, they're behind on an entire economic framework. Think about what that means for everyone else in the industry. Boeing, Lockheed, the big legacy players, they built their entire businesses around government cost plus contracts, where you basically get paid for your costs, plus a guaranteed profit margin on top. There was never a real incentive to drive costs down because the system rewarded spending more, not less. SpaceX walks in with a model where driving costs down is the entire point, and suddenly the old players look less like competitors and more like museum pieces. That's part of why investors are willing to pay such a wild premium. They're not just betting on SpaceX, they're betting that an entire industry just got leapfrogged overnight, and there's no way back to the old normal. So when you try to value SpaceX using old-school aerospace multiples, you get a number that looks way too low compared to what investors are actually paying for it, and that's exactly the disagreement playing out right now. Morningstar, one of the most respected independent research firms out there, looked at SpaceX and basically concluded the IPO price was roughly double what the company is actually worth based on the fundamentals. Their estimate landed somewhere around $780 billion, which still sounds enormous, but it's only about half of where the stock has actually been trading. Meanwhile, you've got bulls on the other side, analysts like Dan Ives over at Wedbush, who are essentially saying, forget the spreadsheets, this is the next Tesla. And remember, people said the exact same thing about Tesla for years. Way too expensive, the fundamentals don't support it, this is a bubble waiting to pop. And Tesla just kept climbing because the market wasn't pricing in what Tesla was at that moment. It was pricing in what Tesla might become. That's basically the bet happening with SpaceX right now. One analyst actually described the whole valuation as essentially a call option. You're not just paying for the rockets and satellites that exist today, you're paying a massive premium for the possibility that things like orbital data centers, a Mars program, or some future version of Starship completely reshape what's even possible as a business in space. If those long-shot bets pay off, the current price could look cheap in hindsight. If they don't, well, that's a staggering amount of money riding on a big if. And here's what makes this even bigger than just one company's IPO. This is becoming a test case for how Wall Street prices an entirely new category of business altogether. We're entering an era where the biggest, most influential companies aren't necessarily the ones with the cleanest financial statements. They're the ones controlling critical infrastructure, whether that's AI compute, satellite networks, or literal access to space itself. And the tools investors have relied on for 100 years simply weren't built to handle that. So is SpaceX a brilliant bet on the future, or is it the biggest overvaluation in market history wrapped in an incredible story? Honestly, nobody actually knows yet. Not Morningstar, not Wedbush, not anyone. What we do know is that the old playbook for figuring this out just got thrown out the window, and Wall Street is now writing a new one in real time, with billions of dollars riding on it while the ink is still wet. If you found this breakdown useful, drop a comment and tell me what you think SpaceX is actually worth. I read every single one. And if you want more breakdowns like this on the biggest financial stories shaping the world right now, make sure you're subscribed to Pulse AI, because this is just getting started. I'm Nova, and I'll see you in the next one.